Are you listening? Damn.
All right, Gene. So now we get to talk about paperwork. Nobody likes paperwork. Nobody likes keeping track of records and things like that. But this is a very crucial component of getting approved for purchasing a home.
Yep.
So the basics that they'll need to get a pre-approval issued are what? Let's go.
So typically it's standard, right? You're going to need 2-year filed tax returns.
Okay.
If you own a business, we need to get the business tax returns along with that for 2 years as well.
Okay.
Then you need to get the W-2s, right? 2020, 2019. Then I need the driver's license, pay stubs covering 30 days, and at least one bank statement to show me exactly how much money you're going to get. If you get retirement income, as far as Social Security and pension, I need to get the award letter that you received as well, so I can see how much you're going to get on a monthly basis. So that's pretty much the gist of it. If you get any type of alimony, child support, anything else that you want to provide as additional income, you want to provide that to us as well.
Now, what about someone that is maybe just coming out of school or changing jobs, which is a no-no? But if that is the situation, what kind of documentation can you use in those situations?
Very good question. So each of them are going to be different. So if you're a student, you came out of school yesterday, you can buy a house if you're full-time. Mm-hmm. I can use your full-time income to qualify. It's important that we understand full-time, right? Because that's used loosely. Full-time for us means that you're guaranteed to work a certain amount of hours per week, because we have to be able to annualize that income. If your paycheck says that you make $800 every week, we can take 800 times 52 weeks in a year and we can determine what your income is going to be. The problem is that sometimes buyers will say, well, I am full-time, but one week, one pay stub shows you work 20 hours, next week you work 40 hours. Well, that's not full-time. Mm-hmm. That's more variable, right? It changes, and there's no way for us to calculate what your true earnings is going to be at the end of the year. In that case, and you're going to need to show at least 1 year to 2 years on the job before we can qualify you. So understand whether you're full-time or part-time may dictate us needing new documents. But if you transfer jobs and you leave a job, then as long as you're full-time, I can use that new income right away to qualify you. But again, if it's not a full-time job, then it kind of changes stuff. You need to be on a job season for a certain amount of time. Same if you get a new part-time job, I see the income, but on conventional, I can do 1 year at a job. For FHA, they're looking for you to be on the job for at least 2 years before I can use it uninterrupted for 2 years.
So basically, you just need like the offer letter that's stating what they're going to get for that next position.
Correct.
Okay.
Correct. And then we can use it right away to qualify you.
Now, one thing I come into, not an issue, but a misconception with a lot of people, a lot of city workers, transit workers that do a lot of overtime, people that do a lot of overtime. They count that as their income because that's what they filed on their tax return, but that's not how you guys count.
We
right?
We do use overtime income. For example, if someone has a base salary of $50,000, mm-hmm. and then they're just started the job, but they're saying that they're making $50,000, but they just started earning the overtime. Mm-hmm. Well, we need a track record to know. Same thing with bonus income, commission income. Yes, this year you made commission, this year you made overtime, but we don't have a history to give you an average.
Right.
But if you made overtime, your $50,000 salary in 2019, but your W-2 say you made $69, we can automatically see that you made $19,000 in overtime, right? Mm-hmm. In 2020, you made similar, maybe a little bit more. Well, that's an easy average, right? You can average your 2 years plus your year-to-date income and see that you're still in line and you're still making the same. So there's no real decline in that overtime income. And now we can use that to qualify you. It's all about having the history of receiving that overtime income. But the problem is sometimes is that someone will switch a totally different industry. Mm-hmm. and they're looking at their overtime income and expecting that the bank can still use that overtime income or commission income, but it's not within the same industry. Therefore, we can qualify using the base, but not necessarily the overtime or commission or even bonus, because we don't know it's going to be guaranteed that you're going to continue to kind of earn it. If you as a buyer can't determine what your end year salary is going to be,
then how can you?
No way.
Right. So it has to be consistent. It has to be documented in order for it to be used as regular income or part of your income source.
Absolutely.
Okay. Now, what about if someone wants to have a co-borrower? What kind of documentation do they have to have in that instance? Do they just pull their credit, or they have to
we
go
still
through
need the
thing?
same documentation for the co-borrower. The co-borrower is still liable for the property. If the money's not coming from the co-borrowers, and we don't need any bank statements from that co-borrower, but we still need the same level of documentation minus the bank statements from that co-signer.
And that's something that goes over a lot of people's head. They just think, oh, my father, he has an 833 credit score. He can, co-sign for me and we're good to go. Well, no, we have to see what kind of debt he has, income, assets that he has, everything that we're asking of the main borrower, we're going to ask for the co-borrower as well.
That's a good point. You brought that up. A lot of times I get co-borrowers and I'll say someone who owns a property already may not be a great co-borrower because they bring a lot of debt to the transaction. So in fact, because your father has an 800 FICO, he owns a property, unless he has a very high income and he can, kind of account for both properties, it may not make a lot of sense to have him on a transaction. So we got to look at all that, and that same documentation required for that person.
Right. So documents for whoever's going to be involved in the transaction needs to be gathered, put together, so that it can be reviewed in the overall big picture to
Absolutely.
See which way to go. And a lot of times people think that the person with the highest income is the best one to be on the loan.
Correct.
And sometimes it could be the person with the best credit. It all goes back to what type of property are you buying, how much are you looking to spend, what you have for down payment, things like that. So there's a lot of pieces to the puzzle that you have to put together. That's why it's important to come to you first and see your options before you just start going out shopping for a home.
Yeah. Because you don't want to go out shopping blindly and then to find out that you really can't really qualify and this may not be the right thing for you. Everyone wants to achieve that dream of home ownership, and the last thing we want to do is set someone up on cloud 9 to only have to bring them back down. So do the homework. I think what we mentioned in the first episode is understanding yourself. Assessment, right? And before you kind of get to that credit side and buying a property, do the self-assessment. How much can you realistically say you can pay a month? How much can you really invest money? How much can you save? I have a very good quote that says, I do what I have to do what I want to do. So if you continue to do what you have to do in life, you're always going to be able to do what you want to do.
That's good. I like that.
So put that best foot forward each time and you're never going to come up short.
Absolutely. Well, that's great information on the documentation that's needed, what people can kind of get together before they come to you. Because one thing in the process that takes up a lot of time is that gathering of documents. And there are some people that don't keep good records, and it could be 3 weeks before they get back to you on one piece of paper that you need.
Oh, yeah.
And by then, a house that thought they could put an offer on, it's long gone. They're willing to contract by now. So that's why it's important to get all your documentation together up front so that you can just run off and buy, go to see what you can buy without having to go back and forth with the lender getting paperwork.
And it's not a waste of time. People think it's a waste of time to provide documentation. It's better that you have someone that does a very thorough dive at your situation, because then that's less work that you have to do on the back end. Imagine you get signed contracts, and that's when I'm really identifying whether or not you can qualify for this property. You can imagine the chaos something like that would cause. So buyers should welcome someone that's really want to making sure that they have no hiccups along the way.
Absolutely, because you don't want to lose, earnest money. You don't want to lose inspection money.
Absolutely.
Your down payment could be at jeopardy just because you weren't forthcoming with the lender who's going to help you. You know, the professionals are here to help the buyers, not, you know, we're not your enemies. Like
that's the operative word,
think.
forthcoming.
Mm-hmm.
They're not always forthcoming. It's
Yeah.
important that you're very forthcoming
Mm-hmm.
because sometimes you can tell us stuff and we can help you out with things, but
Yeah.
when you're not forthcoming, we can't help you see the end of the tunnel, right? We're trying to get you across that finish line. And sometimes the last thing, like, wait, I didn't know about this property. You didn't tell me you own this property. I didn't know this. I didn't know that. So, yeah, forthcoming is very, very important.
Absolutely, because it's gonna come out in the end anyway.
Yeah, it will.
It's gonna come out in the end anyway, so you might as well be honest about it up front, like you said, so
Yeah.
you can get help.
Absolutely.
Great. Perfect. Well, thank you so much for listening to us. One more time, E. Patrice Hayes, real estate broker.
Gene Volsey, your mortgage lender.
Stay tuned to our next segment on real estate and information that can help you.
Peace.
Are you listening? Damn.